Welcome to the channel Get Rich. Today the company we are going to look into comes from a technology sector. So we're going to look into the company, where are their revenues are coming from, and we are going to analyze their financial statements, and we are going to look into their price targets for the next 1 and 2 year. So before looking into the company, so if you like this video, please like, share and comment, and also if you want free newsletter from this channel, please subscribe to the free newsletter in the link below. So let's get started. Today the company we are going to look into belongs to the technology sector. So let's first have a look at the industry growth. So the technology company we are going to look into, their revenue mostly comes from automobile industry. So we're going to look into the global automobile market. So as per McKinsey analysis, the global automotive market is set to grow about 3% CAGR over the next decade from 2020 to 2030. But then the software development and verification validation services will see faster 9 to 10% CAGR growth due to the increased usage of software in vehicles, which is driven by the development of autonomous driving, connected cars, electrification of powertrain and so on. So their industry growth is expected to be somewhere between 9 to 10% globally from 2020 to 2030. And if you look at the electrification or autonomous vehicles in the coming years, so KPIT is likely to benefit from different multi-million-dollar investments which are planned. For example, General Motors is planning $25 billion, Ford is planning $29 billion, Volkswagen is planning $87 billion, BMW is planning $30 billion, and Daimler is planning $70 billion USD. So these are some of the world's biggest automakers for their vehicle strategies in the United States and Europe. These are the very big investments. They can get some of their chunk for their revenue growth. So let's have a look at that. If you are looking into KPIT Technologies Ltd, so the market cap of KPIT Technology Ltd is 15,822 crores. The stock PE which is currently trading at is 64. And if you look into the return on capital employed, which is 14%, and if you look into the return on equity, is 12.6%. It's not great, but that's not bad. It's okay. It's in the range. It's good. If you look into the debt to equity is 0.17, that's good. And also if you look into the price to sales is 6.82, that's also good for a software company. And if you look at the price to book value is 12.4 and current ratio 2.39, so these are good. And then if you look into the price chart, it went up pretty huge in the recent months. So as you know, all of the technology companies went up quite a lot in the past years. So it was trading around 50 in March 2020, the corona crash, and from 50 it ran up to until 700 rupees. Currently trading somewhere around 560, 570. So let's go look at the PE chart. So if you are looking at the PE chart, it even reached 90 at some point, and the average PE of this company is 28. And it reached 90, and even after the pullback currently, so it's still sitting around P of 64. But then we also have to look into with what basis this P is calculated, what are their revenue growth, what are their net profit, and so on. So let's have a look into that. So if you look into their business segments of KPIT Technology Ltd, so their most of their revenue, or almost all of their revenue, are coming from automobile segments, autonomous vehicles and so on, softwares for different vehicles. So mainly all of their revenues are coming from automobile sector. So 77% of their revenue is coming from passenger cars, and 22% of their revenue is coming from commercial vehicles, and 1% mobility. And if you look at their revenue by geography in financial 2021, so almost 42% of their revenue is coming from America, and 41% of their revenue is coming from Europe, and 17% of their revenue is coming from rest of the world. And if you look at the revenue by practice, or what are the different software technologies they are, from which vertical they are getting, or which practice they are getting. So the first one is powertrain. So 39% of their revenues is coming from powertrain business, and then 21% is coming from autonomous driving or advanced driver assist systems, and 11% is coming from connected vehicle, and 29% from other segments. So if you look into KPIT Technologies, so analysts are expecting their growth to continue because they are winning large deals, and the company so derives most of their revenue, 70% of their revenue coming from, for example, advanced driver assist systems, EV, powertrain and infotainment. So the opportunity is big. So most of their big OEMs or OEM companies are planning big R&D investments, so they are going to benefit from that. And if you look into the automobile and mobility industry, they are prioritizing investments in new age technologies, and KPIT, they are the market leader in this segment. So if you look into their some of their growth, where it is expected, so the growth is expected to be driven by electric powertrain, 18% of revenue, or autonomous 20% of the revenue, and battery management systems and development of intellectual protocols. And also if you look into the KPIT, they have a 500 engineers in Germany with 85 to 90% local staff, so they are balancing between offshore and onshore, so that's good. And if you look into the currency wise revenue, so almost 38% of their revenue is coming in dollars, and 36% in euro, and 5% in pounds, and then 11% in yen, and then 4.8% in INR, and then 4.8% in other category. And if you look into their business segments, which is mainly coming from passenger cars and commercial vehicles, so if you look into category by category, how their category is performing over the different quarters. So yeah, in financial 2021, automobile industry faced headwind. So a lot of the automobile companies has suffered because the sector itself is going down or in a downturn. So they also faced that. So their revenue dropped a little bit in quarter in all of the quarters in financial 2021, and they are recovering in financial 2022. So they did 15% in quarter 1 financial 2022 and 17.9% in quarter 2 financial year 2022. That is also based on the weak revenue at low base in the previous quarters. And if you look into the commercial vehicles, it also follows the same, but they are doing pretty good at 32.5% in quarter 1 financial 2022 and 39.9% in quarter 2 financial 2022. And if you look at the different geographies, for example, US growth, so US growth, they are doing about 16% and 19%. And if you look at the Europe, they are also doing about 18% to 20%. That's good. And if you look at the Japan growth, so that's going pretty big. It's 28% and 60%. And then if you look at the other places, it's also 21% and 20%. So they're also growing across the geography. That's good. And then if you look into some of their business solutions, what are they are having? So first one, as I said, the autonomous driving and advanced driver assist systems. So the automobile industry is undergoing a shift as different OEMs are starting to develop their in-house software for autonomous driving. So KPIT, they play a key role as a system integrator in the ecosystem partnership. So they are bringing different engineering services with their software components to accelerate the development of this particular software. So their service offerings are, for example, software refactoring, unit testing, tools and methodology for software quality assurance, so integrated verification and validation solutions through simulation, software integration, and so they are doing a lot of these offerings. And if you look into their advanced driver assist system, this can be a big catalyst for KPIT technology. So because this is a big concept in autonomous driving, and it's a most important technology for self-driving cars. So if you look into autonomous or advanced driver assist systems, it's defined as a vehicle-based intelligent safety system which could improve road safety in terms of crash avoidance, crash severity mitigation, and protection and post-crash phases. So it keeps eye on the road and then make sure you are not in danger. So that's some of the that's the main key use of advanced driver assist systems. And the futures, if you look into the futures of ADAS or advanced driver assist systems, it's a combination of electric systems which are focused on automating and improving the entire vehicle system. So they have increased usage of complex electronic systems that require ultra reliability. So because if something fails, that's going to be a life-threatening situation for the passengers. So ADAS is a mix of 12 technologies that primarily work together. For example, sensors like radar, lidar, and camera, and they also have sensing and analyzing, deciding and controlling. So if you look into these key components, for example, in the car, if you look into this particular picture, so you have radar, lidar, and different sensors, and you have front camera, rear view camera, automated driving control unit, and they have driver monitoring, surround view, and then using all of these you're going to get a different levels of autonomous driving. So there are different levels of autonomous driving. So we are still not yet in a fully automated. So we are still in the partially automated scenario. We are working towards this fully autonomous driving, so that they are going to get a lot of revenues from this particular sector because it's a booming sector, I believe. So a lot of research activities are going on in this side. A lot of big tech companies are fighting on this. For example, Tesla and Google, Waymo, and also a lot of different companies. Even there is talks of Apple getting into Apple car. So there are different companies, different tech companies, they are fighting into the autonomous driving. And the second one, if you look into that, so that's electric powertrain. So KPIT provides different engineering services in the electrification phase. So they have ready accelerators for certain electric vehicle components such as battery management system, vehicle to grid stack, inverter platform, which can be used by different OEMs to reduce their development time and cost of the components. So that's a big thing. So they are also doing pretty good in powertrain. So it's a very valuable service, or because it's something in the future. So it is required. So because all of their current vehicles, so different countries are planning to do electric vehicle transformation. And so even if you look at US, Europe, across the world, even India, they are planning to have a increased penetration of electric cars. They have a 2030, 2040, 2050 goals to get a lot of electric cars. So it's a very, very booming sector. And if you look at the connected vehicles at present, so India is carrying out extensive work in the areas of electric and hybrid cars. They are also doing hydrogen fuel cells, multiple battery technologies. So that's a different kind of R&D thing to do. So this is also having pretty good future. And if you look at the diagnostics and AutoSAR, so for example in vehicle diagnostic, K-Grip is KPIT model based diagnostic solution. So they have a ground up scale architecture compared with state of the art reasoning engine, makes it the ideal solutions, for example. And they also have automotive open system architecture. So KPIT has developed some use cases of their adaptive platform. So this leverages their internet IP and software update capabilities and adaptive diagnostic test frameworks. So they have multiple projects on this. And if you look at the communication and diagnostics, there are some examples like Bluetooth, DHCP, Bonjour Apple, etc. So they are also doing all of these kind of business offerings or software offering solutions to their customers. And if you look at some of their key deal wins in financial 2021, so KPIT receives an important strategic large deal from BMW Group for the next generation charging electronics program. So this engagement particularly covers software development, integration and maintenance of a certain powertrain coordination unit, including charging control, and extends over several years. So it's just not like 1 year they are getting a revenue and then that's it. So it's a multi-year engagement they are going to do. For example, if I am right, then it's 5 to 6 years. So they are going to engage several years and then they are going to work together with this company. So they have a big sticky business. Almost 90% of their business is a kind of repeat business. So there, once the customers are in them, so they are going to keep on coming back. So it's a very good sticky business. So the combined powertrain coordination unit, which is designed to power the next generation power electronics architecture of BMW battery electric vehicles and involves software development, integration and maintenance. So the integrated charger unit is an onboard charger that is combined with the vehicle control unit. So they are doing working with BMW Group, and KPIT is mentioned as autonomous driving partner in BMW investor result. So if you look into the BMW investor results, and they mentioned in the autonomous driving category, the KPIT as one of the partner. That's big thing for KPIT to be in the BMW investor results or investor reports. So that's pretty good. And if you look at the another deal one, which is Triumph Motorcycles partners with KPIT to bring distraction-free digital connected experience to bikers. So KPIT develops one of the earliest technology solutions for 10x10 navigation based on Google Maps for Triumph's premium bikes. So their software platform enables 15 models of Triumph with digital connected experience across the globe, which is safe and distraction free. So these are the key wins, and their additional key wins are they also have wins in autonomous and dynastic space. They also added 2 new age OEMs in China, which are disruptors. So they mentioned that the 2 names are among the top 4 EV disruptors in China. So they are getting in here and there in many places in Europe, US, Japan, and also now they are getting into China, top 2 EV disruptors, their customers. So they are chipping away a lot of customers. That's good to see. And if you look into their different key deals, they have a leading American truck manufacturer, leading American car manufacturer, Asian car manufacturer, American tire one. So most of their customers are either passenger vehicles manufacturer or commercial vehicle manufacturer. And if you look at some of their customers, so their customers are BMW, Veoneer, Toyota, Cummins, Denso, Hitachi, and Honda. So they are also aggressively increasing their workforce in US and Europe in order to get large deals. So they are looking with they are working with very good names or high names in the automobile industry. And if you look at some of their clients, so their top 21 client revenue accounts for about 83% in the last quarter, which is decreased from 85% in previous year. So their active clients are increased from 55 to 58. And if you look into their headcount, so they are also aggressively increasing. So in quarter 3 financial 2021, they have about 6,152 people, and then currently it's increased to 7,826 people. They do see higher attrition rates. They have to address that. So they said, it's common almost in currently in almost all of the IT companies. They are having high attrition rate. People are going always continuously looking for higher wages and keep on going. Even though they are increasing their wages, their attrition rate is higher. So now the IT companies, they have to increase their salaries and so on. So it can be their margin will affect or not. So let's see in the EBITDA margin section. And if you look at some of their partnerships, so KPIT, DSpace, and Microsoft team up to offer a solution for homologation of autonomous vehicles. So data-driven simulation and homologation for the development of autonomous driving is a new field that demands expertise in various areas, including DevOps, cloud computing, simulation, and automation. So this is their partnership to offer a solution. So they are also partnering with the big companies. And if you look into their peer comparison, so for example, Tata Elxsi and L&T Tech. So if you look at their growth in the previous quarter, so if you compared with the industry, so if you look at the KPIT, so their growth in the past quarters, they are disappointing because of the automobile sector, because they have key concentration only in automobile sector. That's also a risk, because a lot of the other software companies, they diversify their revenues in different verticals. So they don't have 100% of their revenue coming from automobile sector. They have fintech space, they have a tech space, they have different kind of manufacturing locations, manufacturing customers. They have different kind of verticals which are diversified. But then one of the key risks for KPIT is all of their revenues are coming from automobile sector. If automobile sector goes in a downturn, their revenues will hit huge compared to other companies, because other companies, even though their revenues coming from automobile sector as well, maybe it's 30-40% or 20-30-40%, and the other verticals they can have healthcare and so on. So that can compensate for this degrowth. But then KPIT, that's also a risk. They are exposed to only one key sector. And if you look at their KPIT growth in the recent quarters, that's okay. They are growing good when compared with the industry. They are growing pretty in time with the company. But then LTTS and Tata Elxsi are also growing much faster. And also if you look at the P names, so I purposefully put it in the data is a bit outdated. If you look at the P of this particular data, our market cap is 5,000 crores. It's pretty old, 1 year or so. Currently it's sitting around 15,000 market cap. But the reason why I put this old data is, for example, if you look at the P ratio, financial 2021, their P ratio was 40, 47, 46, 2022 26, 35, 31, 2023 20, 30 and 26. So they are somewhere in the range of 40s P. Let's look at the current P. We already look at that. Currently it's trading around 65 even after the pullback. So you might guess what I'm going to say. Bit overvalued, or let's say in the valuation section. And then if you look into the financial statements, so they're increasing their revenues. It dip in the, for example, financial 2021 some quarters, because as we know, the automobile sector has a downturn. And if you look at the EBITDA margin, they are increasing, even though they are increasing their headcount, they are increasing their wages. Still they can able to increase their EBITDA margin. So they increased the EBITDA margin from 12.8% in quarter 4 financial 2019 to almost 18.5% in quarter 3 financial 2022. That's a good increase. So I would say their EBITDA margin will sustain around 18 to 19%. That's a good one. And if you look into their net cash, they are also almost having 1,000 crores in their balance sheet. That's good. And their EBITDA is also increasing. And if you look at their quarter-over-quarter sales, so in December 2021, they did about 622 crores with a EBITDA margin of 18% or operating margin of 18%, and they have a net profit of 70 crores. And then if you look into their year-over-year sales, so in March 2019, they did about 641 crores, and March 2020, 2,156 crores, and March 2021, even though the automobile sector downturn, their margins are slightly reduced, or their sales is slightly reduced, 2,036 crores, and in 2022 they are expected to about 2,400 crores with a net profit of 250 crores. And then if you look at their balance sheet, so they're also increasing their balance sheet. They're increased from 1,600 crores to almost 2,200 crores with a reserves of 1,000 crores. Their borrowings are pretty less, so almost have not a big debt. Net debt is zero. And if you look into their cash flow statement, so their cash flow from operating activities is strong. That's good. But then they are also investing, acquiring different companies. They are also paying off some of their debts, and and then if you look at the net free cash flow, so that's not a lot, but still they are having some of the free cash flow coming out. And then if you look at their analyst expectation for this particular company, so their top line, they are expecting to somewhere around 2600 to 2800 crores in financial 2023, and their bottom line is expected to be around 250 to 320 crores. That's what different analysts are expecting for this company. If you look at the shareholding pattern, so the promoter shareholding little bit decreased, but that's steady, that's good, but they reduced little bit. And then if you look into their mutual funds, they increased until March 2021, and then currently they are decreasing slightly. FIIs are also decreasing slightly. And if you look into their key mutual fund holdings, so Nippon India Small Cap Fund, they hold it, and Franklin India Small Cap Companies, L&T Emerging Business Fund Regular Growth, Axis Small Cap Fund Regular Growth, Aditya Birla Sundaram, Aditya Birla, Nippon India, L&T ICICI Sundaram, UTI Nippon India, and Union Small Cap Fund. So there are a lot of different companies which are holding this particular company, and what are they doing in the past months? So as you can see, a lot of red, very little green. So most of these mutual funds are decreasing their share, or selling their shares in the past months. That can be understood because it went up quite a lot, and they want to take profits off the table. So that's that's common. That's not something extraordinary. That's a common phenomenon. And if you look into their valuation of this particular company, so in 2022, I'm expecting the revenue 2,421 crores, in 2023, 2,850 crores, and 2024, 3,300 crores, with the price growth of, or with the revenue growth of 18% and 16% in 2023 and 2024. And if you look into the net income, so 315 crores in 2023 and 365 crores in 2024, with the growth of 21% and 16%. If you look at the price target with the current valuation, which is P of 64, with the 1 year price target is 736 rupees, 2 year price target 853 rupees. If the P can sustain, then it can have a price cumulative growth of 28% and 48%. But I personally see the P, even though it corrected a bit, the P is pretty on the higher side, because it is expected to grow about 18 to 20%, even though this company is working in a very phenomenal industry, or the autonomous driving, electrification of vehicles. So that's going to be a pretty big disruptor for the next 5-10 years. So they're going to have a big revenue increase, big long runway for 5 to 10 years. So they're going to have a very long and good runway. So if you want to ride this company for the next 5-10 years, that's perfectly fine. You can ride the ups and downs, so that's completely okay. But then market can have swings. For example, the P was trading around 20-30 currently, until 90, now 64. So you are going to see different re-ratings, P swings. That's common. But then if we take away all of this, and then if you just think, okay, the company is growing around 18-20%, what is the reasonable PE? So if you ask me, so I would say 40 PE is good for the growth company. Between 80 to 20 PE, that I am comfortable with the 40 PE. So if I estimate with the price target for the P of 40, then the 1 year price target would be 460 rupees, and 2 year price target would be 533 rupees. That's going to be a negative or degrowth for the price, but we never know whether P is going to re-rate down to 40. We never know. That's all based on the market sentiments. So we don't know whether it's going again to P of 90, or it's going back to 40-30. So we never know. But I'm comfortable with doing P of 40. So if you are an existing holder and your viewpoint is, for example, 5-10 years, yes, of course, if your viewpoint is 5-10 years, and if the company is decently growing, and they are giving a very good business model, then you always don't have to sell. You can just keep, depends on your what is your objective. But then if you are a new investor, and if you want to enter at this level, I personally will not recommend to enter at this level, because the P levels are much higher. If there is some few bad news, or if the market sentiments already turning down, and if you find a little bit of for example bad news, then it's going to put the stocks pretty badly. Because now if you are observing US markets, so that's what is happening. So a lot of growth stocks, it was trading around much higher valuations, and the market was trading at a much higher valuation, and then all the growth stocks, value stocks, everything is crashing in US. So a lot of stocks are, for example, if I have to give an example, in Facebook fell about 38% in the past 3 months. If you know PayPal, they lost 47% in the past 3 months. And if you want to look into Netflix, that's also fell about 35-40%. Shopify, that fell about 60% in the past 3 months. So there are a lot of big companies, big growth companies having higher P's. They are falling left and right. So you never know. So you have to reduce your risk. For example, if you are entering at a higher P valuations, then you are not comfortable. So that's why personally, if you ask me if I am going to buy this company, no, I'm not going to invest in this company at this price levels. If it falls more, and if I am find it attractive PE, then I can enter. So currently I have no reason to enter into most of the IT stocks. For me personally, it's not fairly valued, or it's not preferable for me to buy at these levels. So that's it for today. I'm not a financial advisor, so if you are if you it's at your own risk, so you have to do your due diligence before investing in any stock. All of these are my personal opinion. So if you like this video, please like, share and comment, and if you want to subscribe to the free email newsletter, please subscribe in the link below. So that's all for today, and thank you for watching, and have a nice day. Bye bye.